Good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Wednesday, February 25th, and we are back. Everybody is home in their studio, safe and sound, back from Denver, and this is your place for helpful news, commentary, and, of course, answers to your crypto questions. I'm Evan, he's Will, and today we are joined by Alex's stand-in. I'm just kidding. It's a good friend of ours from the Rise Up community, and you know him and love him as Radio Dan. Please welcome Daniel Baker to the show. Dan, how you doing, man?
I'm having a great morning. Thanks for having me.
Man, it's so good to see you. I am really glad that we got to get you on, and I love the love sweatshirt for people in podcast land. He's got this yellow with white letters, real big, says love on it. From the promo graphic you sent me yesterday. That was excellent. So thank you for that. And thank you for making time to join us.
Oh, it's my pleasure. This has been a really great year for me since I joined the Rise Up community, and I'm here to throw it forward and pass the word out there. This is a great place.
Awesome. Well, if you get excited at any point in the conversation about this community, you'll want to know what the heck it is, then hey, you should head to community.rumshq.com. It's the best place to get in touch with all the resources we've created, whether it's a paper trading tutorial, whether it's Radio Dan, all our other friends, or you just have a question that nobody can seem to answer. It's a great place. The only thing missing is you at community.rumshq.com. Dan, you want to take a second and just tell the folks a little more about yourself and how you came to crypto and all that good stuff before we get into it?
Yeah, sure. Basically, I run a media company, and we tell stories, we make songs, we find artists, we put on shows, mostly local stuff, and that's kind of what I do. I love voiceover and voice acting and whatnot, but I got into crypto a little over a year ago. I bought a bunch of Bitcoin, a handful of Bitcoin back in 2013. And then I just let it sit there for a decade. Totally forgot all about it. And then when I realized that Ripple was on 60 Minutes back in 2024 talking about how they bought all the politicians, I thought, oh, maybe I got to get back into this game. It's about to go crazy. And yeah, it is the definition of going crazy since then.
Yeah, although by then it already went crazy for you.
Oh man, both
was worth a great bit.
We're in the third direction of crazy. We went down crazy as soon as I got in. You're right. As soon as you get into crypto, you lose money. So just buckle up, motherfuckers. Pardon me. I got to remember not to speak French. And then over the last year, I've learned how to make money going down and coming up. Even though I made all the beginner mistakes. Everybody out there who's just wondering, is this for me? It is for you. But you will send $80 to a wallet that you do not own or that you cannot find. It will happen. You will not sell at the correct time. You will ride 45% gains down to 75% losses. It will happen. Just buckle up, join the Rise Up community, and try not to get pig butchered. I don't know how to sell this thing.
Yes, please.
Why do I do it? Why? How can I sell?
Oh, it's painful. It's painful.
It's really hard not to look a gift horse in the mouth. All of the things that they tell you about your personal problems, they do come true when you start looking at crypto. I can get a little more out of this. I can push for a little more gain. I know it's going up there. No. Trade the market you have, not the market you want. This is like where I'm at now. This is my Zen. This is my Zen mantra right now. Trade the market you have, not the market you want.
Yeah, it's funny. I'm beating myself up this morning a little bit because I sold Circle stock for a little gain, and I was just like, yeah, because it was in a bearish formation from TA standpoint. So I was like, all right, this hits my rules. I'll sell here. I made a little 8% profit. That's nice. And then its earnings report released at the end of trading last night, and they had a massive beat, And now in the pre-market, it's currently up an additional 18%. And I'm just like, son of but you know, there's the temptation now to like dive in the market, be like, oh, maybe I can get like a little bit more extra on it. I'm like, nope. Gotta stick to your rules, read the market how you read it, and be happy with it if you came away with money, and try not to dive back in, because those emotions will screw you.
Dude, that's where I'm at with Arrow right now. Arrow is just one of those coins that has a mind of its own every once in a while. So kind of like Alex says, always have a little bag of Arrow and always have a little bag of USDC. So my little bag of Arrow is looking really good yesterday and today. And it's reached a point where in one day, if it goes up 15%, I tell myself, you have to take something off the table, period. Just do it. Exercise the muscle, even if it's just $20 worth or $5 worth, just sell something. And right now it's in that sweet spot, right at I sold it at the top of what I consider to be the Wyckoff journey that this token is on over the last day or two. And I bought it back right under what they call the ice line, which is where the low end of that range is. And I'm bouncing between those two ranges with about $25, but I am just like you. I'm waiting tomorrow to wake up and see Arrow another 15 to 30% up, because it'll do that. It'll just out of nowhere just go pop.
Yeah, crypto's good at that, particularly, you know, the handful of altcoins that always do that. And Aerodrome is, at least over the past year or two, has been a coin that has shown a aptability to pop. So you'll always have those opportunities to just take a little bit off the table.
Oh yeah, man. Actually, you got me into Arrow at like the worst time ever, and I rode it all the way down. I bought it. I started buying it in like December of 24, and I rode it all the way down to April. Oh. Then at that point, I was like, screw this coin, get this out of my portfolio. Ditched it. Totally ditched it right before the bull run.
Damn.
But it took me all that time to stop being butthurt and realize that it's an actual good coin, and to buy it again and to sit on it. And luckily I'm doing that now.
You know, I don't think I said it on the show, but one of the founders of the parent company, Dromos Labs, his name is Alex Butler, was on stage at ETH Denver, and I suspect he'll continue to make this announcement other places because that's what they tend to do. Is he was saying that Dromos is going to initiate this second quarter the combination of Aerodrome and Velodrome, two companies that largely do similar stuff. You could split hairs about it, but they're going to accumulate all the value in the Aero token. So I don't know what it looks like. I don't know if they're doing a migration. I don't know if they're abandoning Velodrome. I would imagine they're migrating it to somehow exchange Velodrome tokens for Aerodrome tokens. And then the Aerodrome token will continue on a lot like it is now, where the incentives of all the holders are aligned with the incentives of the protocol. And as they generate revenue, it goes back to the people who are locking up their tokens. I don't have a date for it except Q2. That's what he said. So I anticipate that somewhere around that time, there will probably be a pump of some kind. And then there will probably be a dump of some kind, just like you're talking about now. So it'll be interesting to see it traded.
Is there usually a pump around coins doing a merger? I mean, a merger in the sense where you have like two coins.
No, I think there will be a pump around the news when it's more broadly broadcast. I think if you see CoinDesk or Twitter or somebody pick it up that Aerodrome and Velodrome are going to combine into the Aero token, I bet Velodrome will dump and Aerodrome will pump. That's my prediction.
Yeah. I've been really interested in what the news has done this year. Like, since I'm kind of a relative newbie, I look to Will, and he says, you know, here's some news that could come out. It could throw things up. It could throw things right down. And at this point, after being in it a year, I am completely dumbfounded and ignoring the news. I think the more open-minded you can stay, the better you'll be. Like, I swear to God, one more piece of manipulation comes out and I just laugh at, like today, right before I got on here, TradingView popped up a little piece of news, as it does. And this one's a new one to me. BTC rebounds amidst global positive mood. What the? Who is a globally positive? What is a global positive mood? Don't tell me that this news story means anything. I'm done. I'm done watching why things pump. All I know is it's pumping. Mind wide open. I can react however I need to react. But if I start thinking about what Trump said or any of this stuff, I'm just, forget it. Forget it.
You know, before we got on the stream, Will was talking about Jane Street and the announcement of the news that Jane Street sold Terra, and that is what caused the bull market. And we were talking about whether or not the market was reacting to that as like its bullish catalyst. And I was like, I don't think so. Will was bought in on it. I wasn't so sure. Don't let me mischaracterize though, Will. That's what you're saying? You were saying you thought the market might have been reacting to like the clarity of the news and the lawsuit brought against them. Yeah.
No. I think the market would be really, really, really funny. And it'd be hilarious if the market rebounds here the day after Jane Street gets sued from Terraform Labs for purposely manipulating the collapse of Terra and Terra Luna. And also Jane Street is one of the world's largest private firms on Wall Street. So if there's a lawsuit going, it'd be really fun if all of the Wall Street firms who've been manipulating crypto, and in Jane Street's case, they've been providing crypto services since 2017. It'd be really funny if they go, okay, hang on, there's a little spotlight on insider trading in crypto right now. Let's all just step back for a little bit. And then crypto is allowed to pump. That would be hilarious. And immediately after that lawsuit came out, we did get our first bullish candle formation on Bitcoin 2 days ago, which was a little bit of a hammer candle, and now we're green today. So it'd be really, really funny if this lawsuit just stops insider trading and then the crypto market pumps for a while. It'd be hilarious. And I want it to happen so badly. And maybe we're seeing the first few signs of it on this higher low for Bitcoin with the hammer candle print. So like it's what I want to be true so badly.
Yeah. So a couple of the folks in the comments with the fact check, including Chief Fact Check Officer Bearded, about Terra's collapse specifically, because I'm with you, Will. I think it would be the kind of hilarious and poetic justice that could only happen in crypto. But just a note about the collapse, a lot of claims believe that, a lot of folks believe that regardless of the claims, the data shows that Terra was actually the first to start its own meltdown. That Jane Street was one of the early sellers, but one entity dumped almost $500 million of UST, their stablecoin, on the open market, and that entity was in fact Terraform Labs.
Yeah. In the lawsuit, it's Terraform Labs pulled $150 million out of their liquidity pool, but within like a matter of like a minute or two, too fast to react without having had prior knowledge. Jane Street then pulled out $85 million and helped to facilitate more of the depegging of their coin. So we'll see what happens, if any proof of this. But like, it's an important lawsuit that won't come to a conclusion for about 1.5 years, 2 years or so, because it could result in some rules around insider trading in crypto specifically that don't exist. So like, it's something to pay attention to. But yeah, I mean, an algorithmic stablecoin that fluctuates, I just don't see it necessarily working in most cases.
I don't not see it, but if it's not going to be transparent, then it's not worth it. There's a guy called Fat Man Terra who has a really good summary of this research on his X, Fat Man Terra. Apparently he was formerly of the Terra Research Forum, and I guess he was a big whistleblower during the Terra fraud. So check that out. I can put it in the community. And then just to pivot, we have a couple of good questions coming in. And I'd really like to touch this one from Mama B Thing, who's talking about an email that I have seen a couple of times. Tell me if you're listening, if this has happened to you, especially if you get prepped for your taxes. You may have received an email from Coinbase with your tax forms, but also when you log into the platform, I saw this the other day. Tell me if you guys saw this too. They have a little notification that pops up that says, hey, some of your cost basis is missing. And this happens pretty commonly if you are using multiple wallets, multiple exchanges. Exchanges like Coinbase If you send them an asset from a wallet, they don't necessarily see how much you paid for that asset. They only track data that happens in their system. When you buy and sell something on Coinbase, they track that. But if you sent Bitcoin to Coinbase wallet, or you sent Solana from Coinbase to a Phantom or a Soulflare wallet, or anything like that, then if you send it back to Coinbase to sell it or do anything again, it treats it as if you are receiving that asset for the first time, and it resets the cost basis. This is because Coinbase doesn't have any visibility to what you do with their assets, with what you do with your assets when they are off Coinbase's platform. So you will need to, one, connect a service like CoinTracker that is their partner. They're pushing CoinTracker, or Koinly or Awaken. Any of them will do. You may get a discount using CoinTracker through Coinbase. I don't know. Somebody help me with a fact check. But all of them will require some manual labor. You will have to sit down with your transactions. You'll have to open up your crypto wallets, and you will have to manually do that work. It's not just going to connect CoinTracker and automatically fix everything for you. You'll have to add your public addresses from all the wallets that you use. And sometimes, even after you've done that and you've synced it all up, even CoinTracker and Koinly will still say, I don't know where this asset came from. So you're going to have to be the one to know that that SOL you sent to Coinbase in December is the same SOL you sent from Trust Wallet, which you got from Coinbase back in January in the first place. You are going to be the one who has to do that. It sounds a lot more painful than it is, Mama B thing. How in the world would the IRS even begin to track that, is her follow-up question. You know, that's a great question. I think for most people, the risk is very low that they will attempt to audit you. But the same way that you're able to track that, they can track it. They can see that it was sent to Coinbase from this public address from a Solana wallet, and that Solana wallet got it from this public address, which appears to be a Coinbase wallet, which is registered. You know what I mean? The blockchain's transparent. If somebody wanted to, they could follow it. It would just be a job that I don't envy. I'm not looking forward to it. That's why I file an extension on my taxes every year. And we will definitely, as the year goes on, before the tax deadline, make time to do even more walkthroughs, tutorials, etc. We did one last year. We'll do one again this year, like a tax prep seminar where we show you how to do those things.
I feel the temptation to file an extension on my taxes just so I don't have to do it yet, and I just have a longer period of time to mentally prepare myself for it.
Yeah. Oh yeah. That's exactly it. That's all I do is mentally prepare. And then usually, I don't know, Will, how long does it take you to do your crypto taxes? Like a day? Yeah.
I mean, for me, I've always used CoinTracker, and then I just print it out and I give it to my accountant and I say, what do I owe? And then I pay it. And it's pretty low effort on my side.
Nice. I'm impressed. Machinery says, I was audited for crypto gains last year, got through it, but it was a pain. Track your transactions. Yeah, we have right now a link for Awaken and one for Koinly. They're at the rumshq.com page on the recommended tools and deals tab. You can try it there and help the show, and we'll have a lot more. Or, you might get a discount as a Coinbase user for CoinTracker, but good question.
Dan, do you use any of those tax softwares? Do you keep track of it yourself?
I'll tell you what, this is gonna basically be a teaching moment for all the other people out there who have just gotten into crypto. I am the kind of person who learned how to operate spreadsheets when I got back into crypto. I am a creative person by nature, but I was in pre-calculus. I just forgot it all. It's not that bad, guys. Come on back in, set yourself up a spreadsheet, start getting down. And I know Koinly and all these places, they can do the math for you, but there's a huge amount of mental and personal growth that comes into play when you start figuring out your own averages, when you start learning the differences between buying and selling and how that affects your average price over time, a 15% increase and decrease. So I'm totally into this for the first time after 25 years of not even looking at math. So my subconscious is completely blocking out taxes. It won't even allow me to go near the folder on my desktop. It will not happen anytime soon. I am simply taking solace in Alex's story. where he said, you know what, I lost so much my first couple years into crypto that it's just paying it forward. Like all of the taxes that I can deduct are coming off of my first year of losses. So I might have a couple of years where I have deductions at this point because I wrote a lot of it down, but I'm okay with that because I'm in this for the long term. I'm not going to stop putting my money where my mouth is. And eventually the taxes will figure themselves out. Probably halfway through this year. I don't know when it's going to happen, but I'm just going to take it one step at a time. I'm going to figure out how to swing for 15%. Once I can figure out how to swing for 15%, then, you know, we'll move forward and we'll say, okay, I learned my next lesson. Let's try my taxes now. But no, I have not attempted. I'm not going to anytime soon. It's a mess, and I know it's a mess. So I'm just gonna let it be a mess for a minute.
Yeah, it'll you know, each year you do it, it becomes a little easier, and the software is only going to get better. Like right now, I think that makes it hard too. Like there are some people trying to be TurboTax for crypto, but nobody has like really truly cracked the nut yet. So you know, we'll complain about it one day.
It'd be so nice if I could just get like a single sheet of paper that I print out. It's like, this is what you owe. And CoinTracker kind of does that, but I print out because of all the transactions that I do that. And also it's like, it's kind of crazy because like your crypto transactions, you might just like sell a handful of things. Maybe you staked something, you're earning yield. And all of a sudden you go at the end of the year and it's like, you have 8,000 transactions. And you're like, I feel like I did like 7 things. Like what the hell happened here? And then you end up having this whole sheet of paper, you know, like my crypto taxes, it's usually about this thick of paper, like, you know, without any exaggeration, just like all individual pieces of printer paper. And I just give it to my accountant. But there's usually always one thing that's nice about CoinTracker. And I'm going to try Koinly this year also, is you will have one piece of paper that says net loss, net gain. And, you know, I purposely put all of those papers in to my tax filings to make it more intimidating to anybody at the IRS.
Yeah, who would try to audit it.
This guy, and they're just like, oh, it's so heavy. I'm like, don't touch it. It's a lot of work. It's a lot of work. I don't think you want that. And I think it helps. I think it helps.
Yeah, I think that's something they're going to refine and streamline. Is I know, Dan, like you started providing liquidity this year, and you probably have something that compounds, you know, a couple times a day. I would imagine a lot of those are trying to get as close to real-time compound interest as they can. But what it results in is a lot of microtransactions. Same thing for staking. If you're at home and you're listening and you're staking on Coinbase or anywhere else, each of those little deposits of interest into your account that happens several times a day, they are considered an individual transaction, and they can just be a nightmare. You're going through this software, and if it doesn't recognize that for what it is and classify it for you, you got to like scroll, click, you know, that's staking income, scroll, click, that's staking income again and again and again.
You guys were really instrumental the last month or two, teaching people how to use you know, Uniswap and all these DeFi staking and lending protocols. And I jumped on that pretty heavily. So right now I've got paperwork from Lido. I've got paperwork from Etherscan. I've got paperwork from Jito, and I've got paperwork from Camino, and Turbo Soul is entering my portfolio in a huge way. In fact, pretty much everything from this last dump, all of my dry powder went into Bitcoin and Solana, and Solana went straight into Turbo Soul. I mean, so everything is getting spread out. I've got derivatives and I'm earning staking on my Ethereum and Solana both. Thank you both for being huge proponents of that. And it's a great learning curve. It is fantastic to see that I'm making as much as a high yield savings account without having to deal with my bank. And my bank's just got pitiful excuses for locking up money. So it was great. And at the same time, I know it's going to be a paperwork headache on the other end, but this is the personal growth. You know, you can't make a jump from one place in your life to another without at least playing by some of the rules.
Yeah, we would like to get into it. what I'm thinking is, because I know Will has an early stop today, I'd like to, after he leaves, ask you a couple more questions about your journey, like from staking to liquidity provision into DeFi, because I think there are a lot of good lessons there. We have a question here from Ectorus. Ector, hello. It's good to talk to you about Arculus cards. I want to get there, and then Will, I would love to kick it to you with your time left. There are a lot of people asking, is this the return? Is it the recovery? Maybe you can shed a little light on the financial picture for us. It'd be great. Ector asks,
oh yeah, go.
Let me touch this question first, because it's a good one that a lot of folks will have. Ector just got an Arculus wallet and wants to know if he should configure it with 12 or 24 words in the seed phrase. If you're new to crypto, new to wallets, you may discover when you get a wallet that it gives you the option to protect your wallet with a seed phrase that is 12 words, that is 13 words, that is 24 words. Some of them allow you to add a 25th word. There are all kinds of security schemes. And this is a password, effectively, that backs up your wallet. If an adversary is trying to guess it, it will be harder for them to guess 24 words than it will be for them to guess 12 words. More is always better in the sense that it would be harder to guess, but it may not be better if it's harder for you to store, harder for you to remember, or otherwise use your wallet well. So make that decision yourself. If you're backing it up somewhere like a piece of paper, 24 words is probably best. And then if you want to erase your wallet and get a new seed phrase, that's the second part of his question. Yes, that's totally possible. You can, if you lose your phone, if you lose the card, as long as you have the seed phrase, you can do pretty much anything you want. You can create a new wallet. You can wipe that card and create a new wallet with it. As long as you have the seed phrase, you can back your crypto wallet up in any interface, anywhere, anytime in the world. If Arculus goes out of business, as long as you've got that seed phrase, you can restore that wallet in an Exodus interface or a Trust Wallet interface or a MetaMask interface or on a Ledger device or whatever. That's why seed phrases are so cool. And you're going to get a new one with every wallet that you create. If you don't get a new seed phrase, this is the only exception. It means that you're creating like a new account that will be separate on chain, but is tied to the same seed phrase. We've talked about this before. Seed phrases use something called a hierarchical deterministic, which is just a fancy way to say that one seed phrase can be used to derive many different wallets. This is so you can keep things separate on chain, but if your seed phrase is compromised, if your wallet is compromised, then any wallet linked to that phrase may be compromised also. I know that was quick, and you may have some more questions, Hector, so write them down and then join us with them in the community. If it's unclear, let us know. Bearded from the comments says, Morpho is killing it. We've also got several comments on Bitcoin. Arrow was mentioned several times, Ondo, and Robert was asking about Katana. I'm just going to give it a little, because it's been kind of sad lately. So everybody's tokens are up. Will, what does it mean? Should we trust it? Is it a fake out? Are you excited? Is the bull run back on? Or how are you posturing and positioning for this moment right now? I'd love to hear what you guys are thinking.
I go, hey, green's nice, and then I go about my day and I do nothing about it because like we still don't have confirmation on any type of reversal here. So I just kind of look at this and going, oh, okay, this makes me feel a little nicer because my dollar cost average recently into Bitcoin is slightly better. But that's it. I just keep on keeping on. So I wouldn't get too excited here, everybody. So if I share my screen, we're going to look at Bitcoin here on the daily time frame, and I'll direct everyone's attention to an area to focus on that maybe we could get excited about. So we have this line of resistance here, this white line right about here. And, Bitcoin's been rejected from it 1, 2, 3, 4, 5, 6, 7, let's just say 8, 9, 10, 11 times. And so if Bitcoin comes up here and just gets rejected by it, then, you just have another, hey, it's a failed attempt and, Bitcoin goes lower. But if Bitcoin's able to hold what is essentially $67.5 thousand, let's just say that. Obviously, each day goes by, that number goes down. If we're able to hold that, you could have an opportunity here for a rally. And this candle right here is a hammer candle. It's a bullish candle. So, we have a higher low, right? We have a bullish candle. We currently are having a breakout above one line of resistance, but we're not excited unless we turn this resistance line into something other than resistance, of which is support. So there's that. The other thing as well is if we're all looking, I mean, we're all looking for like a full market reversal, right? And you need to see that happen on longer term timeframes. And right now, Bitcoin on the weekly chart is still in our golden buying pocket, but it's below resistance here. This orange line right here is the 200-week exponential moving average sitting at $68,310, right? Actually, I'll give you the exact dollar amount. It is, well, $68,315. Until Bitcoin is able to end a weekly candle close back above that number, so by Sunday night, that we got nothing. We got nothing yet. We need to turn that $67,000 to $68,000 range into support over the next few days. Then you might have an opportunity here where it's like, hey, actually we've had a candle close above this resistance and above all the resistance I showed you on the daily time frame, and we have an opportunity here to rally to our next major area of resistance, which is our next key exponential, which is sitting at $79,000. Like, that's a pretty big move for Bitcoin. That would be a really big move for altcoins. To measure it specifically, that would be, let's just say, we close above it this week. Now, that'd be a 15% move for Bitcoin. That's like a 40% move for most altcoins, probably, right? But until that happens, we got nothing. We got nothing in order to say, like we found a bottom, right? We don't have that in any way, shape, or form yet.
I'm curious, Dan, as you look at those candles, I know you've been studying Wyckoff this year, and you've been sharing your thoughts in the community. What kinds of patterns do you see? Do you look for are interesting to you? Do you have any notes to add on?
I wouldn't mind. I love talking about this stuff, and I'm super opinionated about it, and I'm wrong all the time. So let's do this. Right now, I'm focusing on Arrow because it was the canary in the coal mine. It started breaking out earlier than everything else. And on that note, I noticed that Sol was breaking out earlier than Bitcoin over the weekend. So I'm using that as another canary in the coal mine to judge what's going to happen with the market. And right now I'm using Arrow as this canary. And basically what I'm seeing is that right now we are at 34,271, which is the very top of what I consider to be a small scale Wyckoff. I'm looking on the 5-minute and it's clear as day. We've had 3 pushes up to a selling climax, and a selling climax is basically as high as it's going to go up in the short term. You usually identify that by a sudden spike in buying on the volume, and then it kind of hovers, drops down one time, which is the automatic reaction, and that defines the high and the low of the trading range it will probably stay in for a couple of days. At least for now, it's been staying in for a couple of days to a week. And the longer it stays in, it just keeps going up and down between those two ranges. So yesterday, I identified the selling climax by the huge volume spike, and I sold. Then I bought back on the automatic reaction. I didn't buy the lowest point, but I got pretty low. And just now, like literally 2 minutes ago, I sold again near the top, which is where we're at right now. So that range has hit 2 tops and a low so far. I expect at least one more UTAD, which is toward the end of this range, when this range is kind of played out, when the major players have pushed it up and down and up and down, and they've twisted your emotions for a day and a half to a week. Then what they do is they dump all their energy into it, and they push a candle up that looks like it's going to go through the sky, except it's not. It's always a fake out, and you're going to fall for it, and I'm going to sell the top. And then I'm going to wait for the decline, and that's called the markdown phase. So right now we're in the distribution phase, which is where all the smart money knows that it's up high, and it's just trying to sell it to all the dumb people out there. And like me, I mean, I'm the dumb people. So don't get all butthurt if you're new in crypto and everybody's dumping on you. That's just the way it goes. until you figure this stuff out, which is why I'm reading all the time. At least that's what I'm seeing right now. I don't trust this market to stay where it's at. I don't trust this market to do. I think it could probably pump up to 36.62 on Arrow. That's kind of my next target. If in fact I'm reading this wrong, then there's a possibility it could shoot up around 36, and that would still be a Wyckoff. It would just be a larger one than I'm looking at. And that, I think, is why it's so important to keep your mind as open as possible. Because even though I think I'm at the top of a Wyckoff, it might only be the first of the 3 pumps. So just keep open. Don't sell everything right away, and don't play too big. Because I've been humbled a lot.
Okay, I want to talk about what is Wyckoff method, but first, Will, because I know you got to go in just a second, I would like to defer to you and give you the chance to ask a final question or give a final thought. What's on your mind before you ride your dog and pony into the sunset today, my friend?
Well, the thing that's just on my mind is, again, like I am always a fan of, I'll sell the entire position. I'll just do, I'm in profits, selling all of it. Like, I don't care. Like, if it keeps going higher, I don't care. I made money, I'm walking away. And like, I make it a principle to be like, I won and I should be happy with that. And if it goes up higher, it doesn't matter because I won and I'm walking away and I'm happy. However, as Dan, you're talking about that, and I look at my circle trade now, I could have made an extra like 20% now. I'm just like, I should have kept some. I should have, because there are plenty of times where I'm like, I think this is important. I think you stick to them, you pick a method and you stick to it when it comes to taking profits. As long as you are taking profits, you're winning and you're doing better than most, right? That's the most important thing. But if you decide to sell everything in a position and walk away, make sure you walk away from that asset for a while. And if you do, like, sell half and keep half the bag or whatever, just make sure you don't get too greedy with that. But I'm certainly wishing right now I'd kept like at least like 25% of my bag or something like that in my circle stock. Cause I'm like, damn, here we are.
Sure.
So, but I have plenty of times too. But the last thing I'll say is, once you pick a method of like how to sell, just stick to that for the most part. Cause like there are plenty of times where, like, right now I'm beating myself up and like should have kept a little bit. But there have been plenty of times where I've sold the entire bag and it was like damn near the exact top. And I'm just like, oh, thank God I didn't keep a bag. So, don't beat yourself up too bad. As long as you're walking away with money and you are actually taking profits, like, you're winning and you're doing great. So that's the thing. Your emotions will always beat you up, and you'll always remember the mistakes more clearly than your wins, because that's just the way the human brain works. But just keep track of it, keep your head on straight, and put a strategy in place that works best for you. But I do certainly wish I kept a little bit of that stock. Son of a. Anyway, that's just kind of what's going through my head right here, right now. And then I'm thinking about, I got to set up a call with my accountant. That's what I got to do.
Got to do it. Okay. Well, once you get the accountant, work out a discount and extend it to the rest of us. Would you use your salesmanship?
No, she's pretty busy. I want the availability.
I understand. Okay. He's your friend. He's mine, Mr. William Watson. We'll see you on After Dark tonight. Yeah, Will?
Yeah, I'll be on tonight. See you guys. See you, Dan. Oh,
bye for
and
now.
Also, FYI, I have office hours today. I'll let everybody know in Circle. But office hours today at, I believe it's 3 o'clock Eastern Standard Time. I'll double check and let everybody know in Circle. But usually I do it on Tuesday, but I'll be doing it this afternoon. So I'll see you guys next.
Awesome. We can't wait. Thank you, Will.
See you.
Bye for now. If you want more Will, you want to check out office hours, the best way to do it is at community.rumshq.com. You can start a free premium trial. It is the way to grow. The fastest way to accelerate your learning journey is really to get into a community of crypto users. But if you want to turbocharge that, then start a premium membership. Will and I do weekly office hours. Alex is working his way to weekly office hours, and until he starts them, he's basically just crashing mine. It's like free group coaching. The trial is 10 days, and then it's $30 a month. In addition to free group coaching every week, you can also get discounts on one-on-ones and other stuff. You don't need to pay a dime to learn with us, but if you are really trying to go far and fast, then it's a great way to do it. And the premium members are some of the coolest people in the community, folks like Dan, folks like Bearded. it's a great place to be. And office hours is a great way to try it. You can start a trial at community.rumshq.com. And if you can't figure it out, you can send a little message there and we'll get you straightened out. And then Alex is going to have office hours coming soon. So
your office hours are some of the best times to learn. I swear, everybody, just if you're in the circle group and you're not attending Evan's personal attention, I mean, it's insane. You will learn so much. Look, there is so much miscommunication in this space. There is so much manipulation going on. If you can see through a third of it, you're ahead of the game. And Evan is great at pointing out, look, I learned so much my first month. I wish I had done it a year ahead of time, because it would have caused me, it would have helped me avoid diving into coins that have no point whatsoever. I bag held for some of the worst coins for months. And then I got in Evan's office hours and immediately learned all the little things about these coins that are not apparent on crypto Twitter or on TikTok. It's so valuable, dude, the way you cut through the noise.
Thank you. I think it works well. You know, we do the show and we try to answer people's questions, but I feel like office hours is kind of magical because first of all, you get to have, like, you know, a conversation actually, which totally changes the learning dynamic when you can, like, back and forth, ask follow-ups. But then what I like about it is, you know, because it's a regular recurring thing, I find a lot of people who, you know, are like, oh my God, I need some help. People who, you know, book a coaching session or something like that. Usually they really only need like one good, like, sit down, come to Jesus, get to know you, figure it out conversation. And then everything else is like maintenance. But the cool thing about office hours is, you know, I'd get to know what you're working on, or, you know, what Bearded is doing or something like that. Over time, you can check in and just kind of touch base. And I really enjoy getting to see people grow. And then I feel like, I don't know, was it 2 weeks ago we were in there and I was talking about how I was long overdue figuring out DCAs for my ETH and my Sol. And I really wasn't sure I wanted to use Coinbase. So Magic was telling me what he was using, and Michael was telling me what he was. Everybody was giving all this great feedback and input. And I just felt like, yes, the student has become the master. I was in this room of people who all had these really informed opinions, who knew stuff that I hadn't had time to play with yet. And that's the coolest part. It really is a great way to accelerate the learning. And I appreciate the kind words. And that's one of the reasons I'm excited to have you here, is because I feel like you have applied yourself and have learned a tremendous amount. So yes, the question comes in, do I get to talk or is it all text? No, it's like a phone call. It's like this. We sit down, we talk, we do the screen share. You say, I don't get how to launch a token on the Avalanche network for my blockchain game. And I say, oh, that's great. Why did you choose Avalanche? And we sit down and we talk back and forth, and I pull it up on the screen and I show you. You know, it's like, instead of calling your mechanic, it's like coming to the mechanic's shop. That's like what it is. Or like, instead of messaging your shrink or watching them on a show, you go in for an appointment. It's tremendously helpful. I have never had a bad review. And
you're not the kind of chiropractor that racks your back really hard the first time. Like, no, seriously, everyone, Evan's got such a light touch that he can change your mind by asking you a question. It's wild.
I appreciate that. Okay. Enough about me, because I got to ask you a question now, because I really don't understand much about Wyckoff.
Right.
I am not a technical analyst. Can you tell me, for the people back home, what is the Wyckoff method? And then give us a little information about it. You've already kind of explained like how you've used it, but like what actually is it? And I'll see while you're talking if I can't find a good screen share to show some of the different phases, etc.
Yeah, sure. So basically the Wyckoff method was created by Richard Wyckoff back in, I believe, 1890s or something like that. I mean, this is old school, you know, before there were derivatives kind of theory. So basically, it's an old theory that says, okay, these markets are manipulated. We can see the fact that they're manipulated, and this is how they are being manipulated. So this is, and the fact of the matter is, this has only been updated since that time. So the theory just continues to grow as the different ways of manipulating the populace have grown. I've gone back to the original material, some of the oldest material out there, and basically they say, okay, there is accumulation at the bottom of the structure where coins are cheap, large operators are buying them, and they want you to sell yours. So at the bottom, during the accumulation phase, they are looking for holders like you and I, retail people, to get all freaked out about how low everything is. And that's the stage we're in at this point. We're in the accumulation stage. Then there's something called a markup phase, where at some point in the accumulation process on the low end, all the smart big money says, okay, we've gotten as much as we can hold at this point in our journey, and we're going to start pushing these prices up, and we're going to sell at the top. So they start pushing the prices up, and everybody jumps in and says, the bull run is back, and they start buying and buying and buying and buying, and the people push the price up, and it goes crazy, and then it's so crazy that no one else wants to buy. And that's when distribution starts happening. That's when all the people that were smart and bought where we are now start selling up here. And they sell a little bit, but not enough to bring the price down too much. And then the price keeps coming up because retail says, oh, maybe it'll go back up. And they start pushing it back up. And then the smart people sell off a little bit more. And then everybody else buys it up a little more. And that's the top. That's the distribution phase. This is where we were back in October, September, on the massive bull run. And then when they've sold all they can sell, they start pushing the price down again. And that's called the markdown phase, which takes you back to an accumulation phase. And the whole trick of this for me, since October to now, was figuring out where that markdown phase actually stops, where the actual bottom is. And technically on a Wyckoff pattern, if you're in a bull market, it's not going to fall all the way down to the 0 line where it started. It might fall down to the 386, which is a level on the Fibonacci scale from the top of the level
Fibonacci is something worth looking up if you want to be a technical analyst. It's not just Wyckoff that uses it, but many methods use it. Remember that Fibonacci. Sorry, Dan, keep going.
No, it's fine. And so I've learned to use Fibonacci. I've learned to use the Wyckoff method, and the two of those combined kind of give me an idea of how cheap or how high a thing can go. I'm not fully read in on any of the statistics because when you start getting into Elliott wave theory and more advanced Wyckoff method, there are ways that you can, from what I understand, mathematically judge where a coin can go up or down. That's a little past my my reading level at this point, but right now I think we are at a very good level to have as a bottom for the Wyckoff scale and still remain in a bullish structure. Lower than this, I'm not so sure. We may have, everybody's expecting one more huge dump down. And I remember back in April when we were in this same spot in April of 2025, where we were as low as we were going to go, but everybody was screaming for more. They wanted further down, and we didn't get it. So right now I'm treating this area that we're at very gingerly. I'm saying we're low enough that I don't want to look a gift horse in the mouth. I'll feel really stupid if I buy a bunch of coins here and turn around and sell them for 15% profit. I'll feel really stupid at the top of the bull run that's coming, whenever that is. So right now I'm not swinging with 100% of my position. And that's the reason that I respect Will for his ability to sell the whole bag and then buy the whole bag back, and then sell the whole bag and buy the whole bag back. I get it. That's a way to go high risk, high reward. But at the same time, I remember selling my entire SWE bag back in April for 15% profit and having nothing left. And that thing just popped the week after that and went on to be one of the top coins in the entire bull run. And I sold my entire bag for 15% profit instead of holding it through to October and getting a 3 to 4x. So there's the strategy where you go high risk, high reward, but I don't think that this is the place in the cycle to do that, because these prices are gifts, and I'm happy to swing a little bit of it here to make a little bit more on the way up, but I'm not doing the whole bag. I'm treating these areas as a low on the Wyckoff distribution scale. I also like Wyckoff because you can see it. You can actually physically see it. You know, Elliott wave is a little more complex, and it's harder for me to see that. But you can physically see it on a 5-minute chart all the way to the macro, you know, monthly and weekly charts. You can still see it. So it's a good way to kind of get your bearings if you're not 100% mathematically tuned in.
Yeah, and it's something that is a visual thing. If you're listening in podcast land, I shared on the screen a couple of illustrations of like the cycle, the markdown phase that Dan was describing, but this is pretty easy to Google if you just search Wyckoff, Wyckoff, and there are a lot of resources online. I would love to know some of the ones you learned from. Somebody mentioned in the comments that our friend Yaboyski has a lot of resources on this. He uses Wyckoff a lot, but who are some of the folks you learned from, or what has helped you? You said you went back to the original text, but like, what should I Google if I want to learn?
Okay. You know, Yaboyski was the person that originally turned me on to the method. You know, and I am going to pull up my textbook that I have on
excellent.
the Wyckoff method. Right now, it's called the Wyckoff Methodology in Depth: How to Trade Financial Markets Logically by Ruben Villahermosa. Ruben Villahermosa. Now, this is a translated version. I believe he's Portuguese, and he is translating it from the original German. So there's a lot of very interesting ways that he phrases things, but I actually kind of like that because it's not standardized. It kind of forces my mind to open up to what it is actually saying. And like he has a phrase, when it enters the markdown phase of the Wyckoff theory, it'll stop, but it's the first stop that does not prevent further momentum. And you hear that phrase and you're like, what does that even mean?
Yeah.
And at first you don't understand it, but then as you follow along with the charts and the book and about $100 on the line, it's amazing how much you understand real fast about what's happening. So the first thing I recommend is the Wyckoff Methodology in Depth by Ruben Villahermosa. And then after that, you've got any number of texts that have brought it up into the modern day, and they add little things here and there. But that's, if you want to get the basics of it, that's a great text to start. It's not math heavy at all. It's just methodology.
Yeah. I like this comment from DJ Tommy G, who says, no way to learn quicker than losing money. That's correct. Yeah. And it doesn't have to be a lot, does it? It just has to really, you have to have a little skin in the game, because then you can see, oh, it started as 10, now it's 15, or now it's 7 or whatever. And even just noticing how that makes you feel will make you, I think, a better trader, and getting mastery over that.
Sure.
And surviving a couple of cycles. That's something everybody works on.
It's really important. How you feel is part of the learning curve that I just got over. I'm so happy it's finally over and I finally figured it out. But until you have money during a major drawdown, you do not know how difficult it is to trade. I used to say people with money can make money and it's no problem. False. This is one of the things that, okay, I'm as progressive as it gets. I'm as liberal as you want to be. And I used to have a chip on my shoulder saying, I can't make money because I don't have a bunch of money. Well, that's also false. But you can't hate on people for being traders, because this stuff is rough. It's not just rough on your mind. It's not just rough on your bank account. It's rough on your body. If you're getting into this, be aware. I had pretty much every penny I own invested when it started to fall in October. And by the end of October, my guts were in a bundle. I was absolutely physically ill. I was not taking care of myself, wasn't drinking water enough, wasn't eating enough food. And that was the unintended consequence of riding that stuff down. So by the time it had come down about halfway, we were almost to where we took a little break in November. On November 21st, the descent fell so far, and it took a break there, and it ranged from December to late December. And during that period was the first time I took, I think it was about $1,500 off the table at the top of a cycle. I wrote it down to the bottom of a cycle, and I bought it back based on Wyckoff alone. And over the 4 days that it took to go up and come back down, my guts went insane. There was more money on the line than ever. I had never put that much money on a trade, let alone a short. And it worked out great. But over 4 days to make this work, I had alarms set to tell me when the price was breaking through a key average of the Wyckoff scale. So I would be asleep at 3 in the morning, and it would break. The alarm would go off, wake me up. I would get up, I would do something, and I would go back to sleep. And then 6 hours later, I'd get an alarm. And for 4 days, it was like that. I was at the behest of the market. I had to execute. And if I was going to execute, I had to see when the drops were happening. And to do that, I had to wake up at 3 in the morning. I had to be available at 2 in the afternoon. I had to be awake at 10 a.m. So I didn't sleep for 4 days, more than maybe a couple of hours at a time. But this is how I wanted to learn. I wanted to see every part of this process, and my brain just wouldn't let it go. So when I took that money off the table and I bought back at a lower rate, I slept for a day. I slept for an entire day. So don't let anyone tell you that trading is going to be easy. Even if you know the formula, even if you know what you're going to do, you still have to execute it. And sometimes that means staying up all night or getting 20 minutes of sleep. If you're not in it for that, I'm totally cool with that. You know, buy low, sell high, have patience. All those things are true. Time in the market is better than timing the market. We all know the sayings, and you can do that. But if you really want to goose the, you know, it's going to take effort, and it's going to take a toll on your physicality and your mental acuity. So just be prepared.
Oh my gosh. Okay. My blood pressure's rising, and so is everybody's in the comments. Steve says it's exhausting. It is, but hey, you can learn to do this. That's like the moral of this story. If you're just tuning in, you're scrolling through, or you forgot, this is Daniel Baker, aka Radio Dan. You can connect with him in the Rise Up community. It's community.rumshq.com. That's the web address. You type that into your browser, you can get there. I've been told that on TikTok, the link in our bio is not working. Thank you, Jay Heat. But wherever you are, whenever you listen, you can go to the bio, and the link that is there will take you to it. And of course, if you can't find it, leave your questions in the comments. I would like to go 2 places with this. I want to go to make a pivot to other strategies that you've learned that maybe require less sleep loss than watching like the hour by hour candlesticks. But I want to answer this comment first. Will there be, Myard now asks, reliable AI tools for this? Thank you for the question, Myard. This is tricky. There are tools that exist right now where you can use an AI to learn these patterns and even to predict these patterns, but trading effectively relies on something called an edge. It's not that you have to be an insider, sitting at the left arm of the president, though that would help. But every trader who succeeds is beating the market to some extent. And so if there was an AI tool that made perfect trading ubiquitous, that everybody everywhere had access to, then it would not, by necessity, have what's called the edge. These patterns work, but if everybody everywhere all the time was making trades, buying and selling based on what these patterns said, that would to some degree change the patterns. Nobody would choose, if they knew the chart was going to go off a cliff, to buy. Everybody would sell. And that would push the chart off the cliff even faster further. So you can learn from history, from these AI tools, from patterns, but you need to have some kind of edge. Like Dan was talking about a minute ago when he called Sol and Arrow the canaries in the coal mine. That's an edge because he saw a pattern happening earlier on their charts that he decided gave him enough conviction to make a move on another chart that maybe the rest of the market would follow. Do you care to give more elaboration on that idea, Dan, of advantage, edge?
The thing I would stress even further is social media and influencers who teach trading patterns. So every time you go on YouTube and you find a super popular pattern trader who is promising you that they $1,000 in 2 minutes or $5,000 in a 30-second trade, basically what you're doing is you're learning patterns that are so abused and so used that the institutional large money traders have already figured out that's how you're going to act. So they've already changed their patterns to contradict yours. And that's where you're never going to have edge, period. Forget about it. You're never going to have edge. And the reason you're never going to have edge is because you're not looking at the order book. The order book is the ultimate king of all of this. They see how many millions are being sold and how many millions are being purchased. And they're seeing which prices are going to break and which prices are going to hold up. And that is information that we do not have. So my edge has gone from trading when there's 35% profit to trading when there's 12% profit. I say, okay, I don't have as much edge, so I'm not going to expect the highest end on the spectrum. But as Will said, 7%, 12 times doubles your money. I like to say I would rather trade 12 times at 7% than one time at 170%. Like, totally. Just lower your expectations. Take the money that's on the table. It's still better than anything else you're going to get. I would push it a little forward on the long-term scale to say that I'm doing it this way, and I think a lot of people want to do it this way because they're pushing into their older age and they need something when their body falls apart. I can sit in front of this. I can sit at the front of this screen for the last 30 years of my life, but I cannot continue to lift 200-pound boards above my head to create a roof for someone else's house. That's my edge. My edge is that I'm in it for the long term and that I'm going to sit here until I figure out a strategy that really works for me and pays for everything. My edge is long term.
I want to show people just like 2 quick screenshots that might help with this. If you've never seen an order book before, podcast land, sorry, you're going to have to go to YouTube for this one. But the interface might look something like this. This is on Coinbase.com, which a lot of our friends here will know.
Forget my absence for one moment.
Take your time. You're good. This is Coinbase Advanced. In the settings of Coinbase, you can toggle on or off advanced mode, which opens up a couple of features and makes the user experience a little, maybe more intimidating to new users, but this will be familiar to anybody who's used a trading app before. And this screen here that lists all these prices, all these amounts, some of them are red, some of them are green, and right in the middle is the current price. These are the order the orders on the order book, and you can see the most recent trades that have gone through. But you can also see the trades that are waiting to go through. Trades are executed at the current price. I'm pointing my finger to it, podcast land, and it's changing second by second by second. The orders above it are sell orders pushing the price down. The orders below it are buy orders pushing the price up. This is a real-time order book. And you can use other different kinds of interfaces. Coinbase is only going to show me, a handful of orders at a time. I think about 50 in either direction. But any trading site is going to have an order book like this. And you can also use resources like the liquidation heat map that we've shown before to see where there are really big orders that will move the price up or move the price down or keep it in place. You might have heard people use phrases like buy walls, sell walls, or liquidity traps, pockets of liquidity. These are all just different ways to talk about orders that are sitting on an order book. Some of these order books are closed, meaning like Coinbase has this on their servers. Some of them are open, they're on chain. And in fact, the crypto vision of the future is that all orders everywhere would be on chain so that nobody could be manipulating the market with data that's not transparent and available to all of us. One of the reasons traders like me, traders like Dan probably prefer trading on chain is because if you're truly on chain, you can see every order that is on the books everywhere. Of course, there are ways to take advantage of this too. If you're somebody who's got a trading bot, then you can make it so that with a little sophistication, you can detect those big orders more easily and you can position around them. It's a topic for another time. But just know that this information is out there. You can learn it. The best way to do it is like eating an elephant one bite at a time. I'd like to pivot, Dan, if it's okay with you, to talk a little more about liquidity provision, because that's something I think a lot of people want to get into too. They're interested in staking. They're interested in providing liquidity. They want to earn passive yield on their crypto. So can you tell me what your journey into that was like? And then maybe we can show folks a couple of different resources.
Yeah, sure. Basically, I started out with 50% of my Ethereum, 50% of my Solana. And basically, I keep 50% in a cold wallet, and I try to swing trade 50% of my portfolio. And that changed when you brought up staking. So I took the 50% from my cold wallet and I put it on Lido and I put it on EtherFi. So basically I took my Ethereum and I'm earning 2.3% APY every year. It should be up on 2 different platforms so that I could figure out which one works better and kind of go with that from here on out. And I really haven't looked at it. I did this in mid-December and I really haven't looked at it. Honestly, I don't know what it's doing. It's probably fine. I think I need a little bit of a tutorial about how can I screw this up? That's the one thing that you guys didn't cover is how do I screw this up? And so I'm just assuming I'm not screwing it up. I've staked it and I've left it there. And I have not done anything else with those coins. Then I took half of my SOL and I put that into Jito. And I got a bunch of Jito SOL back. And that is my staking of SOL. Now with SOL, I went one step further and I restaked it for JTO, which is the governance token of the Jito network. And I just kind of wanted a little bit of that. I'm not sure that it's particularly, honestly, I don't know what the difference is between getting Jito SOL and some of the other options. Perhaps there was a better option, perhaps there wasn't. But for my first restaking, I just went with a governance token and I'll call it good there. That was a little weird. Honestly, restaking was a little bit of an emotional problem. Like I went to restake it and I stopped and I said, wait a minute. Now, if anything happens, I got to reclaim, I got to sell JTO and then get my Jito SOL back. And then I got to take my Jito Sol and I got to sell that to get my original Solana back. I'm not so sure I'm cool with this. And I pulled back and I didn't do it. And I waited a couple of weeks. And then I thought, well, okay, let's take the added risk for another 2.3 or 3%, so that my Sol is now earning maybe 5%, maybe 6%. And I did that, and I'm cool with that. And I've just left it alone. And I'm just not even gonna touch it until prices start moving back up at some point. And I'm assuming am I correct in assuming that you want to stake when it's low and you don't want to pull it out until?
Yes.
Yeah.
Yeah, I would say so. And just to answer your first, that's a good answer to your first question. Like, how am I, or can I mess this up? The number one way I see people mess staking up is by not knowing about or understanding lockup periods. So when you stake ETH through Lido, we'll just use that because you're doing stuff there. You get a token, ST ETH or wrapped ETH or something like that. And in addition to functioning as your receipt token that can be redeemed for the ETH, not only do you have to present them this token to get your ETH back, but you also have to submit a withdrawal request through their system. So you request it, and then under normal conditions, meaning not everybody is trying to withdraw, it usually takes 1 to 5 days before you can claim, that's the second part, your actual ETH tokens. If the protocol is like really busy, if the network is really busy, you might think of this like a line outside of a store that's about to open. They process those claims and withdrawal requests in the order they are received. And you can do things to like bump your spot up in the queue, but for our intents and purposes, if you're using Lido, you're standing in line behind every other Lido user. And the reason that queue is lower and it's better to stake now is because not as many people are rushing to sell their ETH right now. Most people are trying to buy more right now. When ETH goes back up to 4,000, 5,000 or more, then those lines are going to get longer because everybody who was staking is going to want to unstake so they can sell. Make sense?
Yeah.
And that's not a Lido problem. It's not like if Lido had more employees, they could process those faster. It is partially a Lido thing, but it's mostly an Ethereum network thing. The network, any blockchain network, can only process so many transactions a second, a block. And so all those people waiting in line are, like at a club, getting their hands stamped by the official stamper. And there's only so many stampers and they can only stamp so many people X minutes at a time. But that's something that'll improve in the future. Ethereum is always being made faster, cheaper. People are working on it. During that period, the tokens that you are trading, like your staked ETH, your ST ETH tokens, those are illiquid. So if you're using them somewhere else, maybe in a liquidity pool or restaking them, doing something like that, you have to, when you're trying to claim your original tokens back, you're not earning any more interest. Usually, like I said, it's less than a week though. Now, let me answer your other question that you brought up about the difference between restaking tokens. You mentioned Lido and you mentioned Jito. For people who aren't familiar with either of these protocols, they are just businesses that write computer code that allows you to participate in staking, respectively for ETH, that's Lido, and Sol, that's Jito. Lido and Jito, Lido and Jito. There are many like this. And they all these staking providers, they give you, when you give them your deposit, they give you a receipt in the form of a different crypto token. In Jito's case, this is Jito Sol. You give them Solana tokens and they give you Jito Sol tokens. But there are many protocols like Jito that also offer the business staking and they have their own tokens. So Dan, to answer your question, like I'm not really sure why I would do it with Jito or get Jito Sol. What do I do with it? You might use DeFi Llama or another such website to compare the yield rates on Jito Sol tokens to other Solana staking tokens to try and find the best rate to earn. Another competitor that you might be familiar with is Marinade. Marinade is a competitor to Jito. You stake your Sol on Marinade, they give you MSol. And MSol, just like Jito Sol, it goes up in value based on the rewards accrued to the soul staked with the protocol. So everybody gives Marinade a pile of their soul, and then whatever it appreciates by, the M soul token appreciates by. Everybody gives Jito a pile of their soul. Well, the J soul token appreciates with the underlying assets. And the actual business that they're doing, Jito and Marinade have like proprietary ways that they go to the validators, the people whose machines do the actual work of processing transactions, who get the staking rewards. And they say, hey, look, we are going to give you a pile of soul tokens to do your work with. We're going to lock them up with you. That's what a validator does, is they lock up these tokens that allow them to do the work. It's not like they keep them and use them like a bank would. No, they're using them in the work of processing transactions. What are you going to give us back? Marinade does this to staking providers. Jito does this to staking providers. And if you are somebody running a Solana node, then you're getting this inbound communication and you say, you know what? That Marinade deal is looking pretty sweet. They only want 5% of my yield. Next week, it could be, oh, the Jito people, they're looking pretty sweet. They only want 3% of my yield. And so the businesses like Marinade and Jito are competing for who is going to give them the best deal and pass through the best yield to their customers. They have different proprietary ways of doing it. You don't need to understand it. Honestly, all you need to know is that you can shop for the best rates. The rates tend to change. And probably what's most important is that you're using a reputable provider. Because if a new company sprung up, let's call it, Dan and Evan Soul, we would be like, guys, we're going to give you 100% of the yield. Just bring your soul to us. Because what do we need? We need deposits. It doesn't matter that we're giving up the yield. So, but we're a new kid on the block. We're untested. So you rightfully would be hesitant, even though we're offering you a really good deal, you'd be hesitant to come eat with us because we're not as tested as Marinade, as Jito. And probably if we don't gain traction some other way, our yields will eventually go down. We won't be able to keep paying you money like that. It happens in other businesses. It happens in crypto. And you can learn more about it. That was a lot. Somebody like Dan can talk you through it. He's been there. I've been there. You can be there too. It doesn't have to be too difficult. You can start earning yield on your crypto.
And the interesting thing that is coming up in my journey, which I have not started yet, but I imagine I will, is the neat little thing that I noticed after I purchased JTO with my Jito Soul, after I restaked it for JTO, I noticed that the JTO token, when things go up, it goes up 5% when Soul is only going up 3%. Yeah. And it goes down 5% when Soul is going down 2%. So if you are looking for an edge, basically, instead of swing trading your Soul token, you swing trade your JTO. And it's the same risk. You're still risking losing your Soul. I lose my
what
soul
a thing to say.
I lose my soul for science. But basically, in the future, I will start swing trading JTO. I haven't had the time that it really takes to watch how JTO moves, because everything moves with a certain personality in the market, and Soul is going to move different than JTO, even though they're related. So if I sell my JTO when it's up high and I buy back when it's super low, I've earned more Soul. In fact, I've earned more Soul than I could have done if I was trading Soul. Okay. So that's the frontier for me of restaking, is that I see big banks making moves with derivatives. I now have derivatives. I'm the bank. So that's what this whole thing is about to me. Is the original ethos of crypto was that we want to do banking stuff, except we can't. And now we can. Yeah. And that's the cut and dry of it. Let all the regulations work themselves out. Let all the institutions fight over space. I don't care. This is something new to 90% of the people in the world. And we should be out here exploring it like it's just going to be the way the world works from now on out.
Beautiful. Dan, I know you got to get going. So I'm going to share one more time, upwardlycreative.com if you want to get in touch with the wild and wonderful mind of Mr. Daniel
Yeah.
Baker.
And if you
And
want
of
to
course,
see me live, please come out. I do this thing called the Ministry of Bad Ideas, where I've got a show coming up in Philadelphia on March 20th. If you're in the area, please just shoot me a line. I'll make sure you get there. We are selling handmade merchandise and NFTs. That is the future of the music industry. But come out to the Ministry of Bad Ideas. We're a burgeoning cult. We don't have a lot of, it's like 0.001 Ethereum to join right now. And I promise there won't be any of that stuff with your wife or anything like that. Like we're a nice cult. We're pretty cool. We're just trying to teach people how to avoid the worst ideas in life. But upwardlycreative.com is a great way to keep up with the project. And I'm on Instagram all the time under Ministry of Bad Ideas.
Beautiful. And do you have anything else for our audience today before we say thank you for now?
If they're going to double down, we should double down too. Keep going, people. Don't give up. This space is still young. You can win.
Dan, thank you so much, brother. If you are listening to this show and you want more and you're like, where does the time go? I see a lot of questions rolling in. Don't worry. We're going to be back tomorrow. Same time, same place. We start at 8 a.m. Eastern, Monday through Thursday is the Rise Up Morning Show. We also have Rise Up After Dark. That's tonight at 8 p.m. Eastern. We'll be going for a couple of hours, and we would love, love, love to see you there. If you don't get your questions answered on the show, the best place for them is community. This is the website, community.rums, rumshq.com. Love to see you there. And until next time, everybody, thank you for being the best part of what we do. Dan, everybody loves you in the comments, and we'll have to have you back again. If you want to connect with him and want to connect with me, that's the place to go. And
I'd love to update you on my NFTs, because you guys are you guys have helped me create and learn how to create NFTs, and that's where I'm building. So I'd love to come back and talk more about that.
Excellent. We expect it, and when it happens, we'll see you all there, everybody. Until next time, stay safe, be well, my friends. Rise up.